get into things. Hello and welcome, everyone. Thanks for joining us today on this webinar. Before we jump into the content, I want to give everyone in our wonderful panel a chance to quickly introduce themselves, starting with the wonderful Lee.
Oh, thank you. Well, it's a pleasure to be here. Thanks to those that have joined today. My name's Lee Carrington. I'm based here in the UK with Sophia, and it's a real pleasure to be on the panel and in such good company. I've worked at Tillo for coming up to 2 years in August, and I help fintech and crypto platforms to think of creative ways in which to leverage our global e-gift network, or as I like to call it, branded currency, with the end consumer. But prior to this, I worked for a global payment processor and card acquirer, where I helped merchants deliver seamless payment experience to the end user. And I mustn't forget my other job. It's quite an important one. I'm a mother to 2 teenagers. Yes, that's 2 teenagers. They are 14 and 15 years of age. So if you didn't feel sorry for me already, wait for the sledgehammer blow. They are both boys. So on that note, if anyone would like me to come and see them and discuss this, I'm very happy to do so, as long as it's far, really, really far away. But yeah, well, thanks ever so much. That's me. Over to Nicole.
Well, come to Atlanta anytime. So, we got lots to talk about. Hi, everyone. I'm so honored to be here. Nicole Stanland. I am based in Atlanta. So maybe I should say, hey, y'all. I have been in the gift card industry my whole career, which I won't tell you how long, but I can tell you long enough, not to date myself. And then I've been at Tillo just over a year now. I joined the team, and it's been such a privilege to get to help scale our business here in North America. And then before joining Tillo, I worked honestly a little bit more in the B2C space. So working, with large national retailers like Costco and GameStop on their physical and digital distribution. But I've loved getting my, more into the B2C space, because my favorite part is getting to help businesses come up with really creative ways to leverage digital currency and gift cards to drive revenue and engagement. So I also am a mom of twin girls. So, we have our own challenges over on the girl side. Don't you worry, Lee.
Well, such a pleasure to be here, especially with such an incredible group of panelists and experts. My name is Michelle Bayo. I'm the CEO and founder of Finnovator. I'm located in Toronto, and I actually have spent my career in multiple different industries. I spent 20 years in the corporate space, 6 years in telco, 8 years in online shopping, affiliate marketing, ran Alaska Lufthansa, Delta United online shopping mall platforms, and then jumped 2 feet into payments. Though I didn't have much knowledge in that space, I was working for one of the largest prepaid companies globally and got to experience what was happening on a global scale and how prepaid was the innovation rail. So I'm really excited for today's discussion. But I also spent a year in blockchain, focused on digital identity and consent on blockchain as a chief client officer. And then realizing that my whole career has actually touched different aspects of the future of finance. I won Money 2020 Rise Up, where they picked 30 women out of 500 back in 2019, and kicked off Finnovator, which is a future of finance consultancy largely focused on helping companies, banks, and fintechs take steps into the future of finance. And so honored to be an advisor to Tillo for almost a year and a half now, and get to be part of this incredible session to dive deep into loyalty and how it changes the game.
Thank you very much, everyone. I'm Sophia. I'm the author of Bridging the Loyalty Gap Research. I'm the content and product marketing manager at Tillo. I don't have quite as an exquisite career background as you all, but I've always been in SaaS and in tech, and it's definitely where I plan to stay. It's so interesting. So yeah, let's jump into why we're here today. Well, by the end of today's webinar, you'll have learned a little bit more about what's blocking fintech adoption, what the current loyalty landscape of fintech is looking like, what consumers are searching for, and the rewards incentives they want to receive. And hopefully you'll all be walking away with a blueprint for a winning loyalty program that you can inflict into your own strategies. So a little bit about this webinar in general. Throughout this presentation, I'm going to be referring to insights that have come directly from Bridging the Loyalty Gap, which is Tillo's latest white paper. It's an independent piece of research that we've put together in which we surveyed over 4,000 UK and US consumers, and we split our findings between fintech broadly, but also neobanking, buy now, pay later, open banking, and crypto. So all the graphs and all the data are from that white paper. So panelists, let's kick things right off with a graph and start at the beginning by taking a look at how consumers are currently engaging with these 4 core categories of fintech. And Lee, we'll go to you first. As you can see here, there's pretty good engagement across the board, especially in younger demographics though. How do you think fintech usage is going to change in the next 5 years or so?
Well, I see constant evolution as fintech never really stands still. It just keeps on moving and enabling more features for the end consumer. It's no surprise really when you look at the graph there and how neobanks are so popular within certain age groups, because it does really develop such rich and relevant features for their target audience. If you think about some of the things that they position that are different from retail banks, like no overdraft fees, cheaper or no FX when you travel, a holistic view over your entire, finance with open banking. And I think on that subject, I think over the next 5 years, open banking will see its catalyst moment, giving consumers access to, a wider range of finances that they wouldn't have had access to before. And finally, going forward, I think we'll see far more super apps where they will have a single access point so you can view everything in one place, all of your finances. And within that, rewards will be key to really unlock that engagement piece and maintain and retain the consumer.
Yeah, it's definitely a really exciting time across all of these industries. And I think, Michelle, we spoke in our pre-panel session about one of the really interesting things about open banking here is that maybe the answers are almost skewed because people might not know they're using it.
Yeah, I think this is a great chart because I think you can see what's happening from a neobank perspective. They realize they're using something different from their core bank and that it's giving them some different offerings. Like Lee was saying, it's giving them that, no fee kind of concept and saving the money as they travel. When I think of open banking, I think in the UK, they definitely know that they're utilizing it. There's been a lot more marketing and it's been in market a little longer. But when you look to the US or North America in general, a lot of people don't realize that they're screen scraping to access a new service, or when they're going to go touch this new micro banking opportunity, that they're actually using screen scraping to get there, which is open banking. Not the best parts of open banking. Really, it should be a seamless API, but we're a little farther behind here in North America. So I think what they're not truly understanding is the fact that millions of Americans and millions of Canadians are utilizing screen scraping to access simply new services. And as they start to understand that that's really open banking, I think that they'll be able to answer this differently. But it's really truly unlocking and making seamless integrations, seamless onboarding. So I think this number will definitely go up in the next 5 years. As Lee was saying, it's kind of the catalyst moment for open banking to kind of unlock that dashboard of finances that will allow you to see everything that you're up to without having to give away your password to a certain app to get there.
Yeah, definitely. I think, as you can see already, open banking, especially in the younger demographics, more people seem to be aware potentially they're using it or are actively trying to find apps to use it. I definitely use it a lot in the apps I use. Just it's amazing. And I think also there's an element, isn't there, around kind of concern over data, and maybe younger demographics like myself, I'm less concerned with sharing my banking data than potentially the older demographics. But as we educate and we start to see the benefits, yeah, that definitely opens up a world of possibilities. So alongside asking people about the behaviors towards the fintechs they do use, it was also more important to us to ask them about the questions of why they weren't using certain services. And perhaps very predictably, the most common answers were, I don't need it, I don't trust it, and I have no incentive to try it. So my questions to the panel, starting with you, Nicole, I guess, are these answers particularly surprising?
They're not, honestly. I mean, I think about, changing behavior, any kind of behavior is really difficult. It takes, a lot of work and effort thinking about the end user and the experience to really make them want to make a shift from what's comfortable, what they're already doing. And so in order to make someone change their behavior, there has to be some sort of incentive to do it, right? I mean, none of us are going to start, using a new bank if there's not benefits, like you mentioned, no fees, international access. So there are various ways that you can do it, to offer incentives. Obviously, across all of these sectors, I mean, that's the beautiful part is they can all leverage digital gift cards really easily to be able to, and the discounts to be able to really find unique ways to push that incentive for adoption.
Yeah, changing consumer behavior is tough. I think everyone knows that.
Definitely.
And Lee, you do a lot of work in the crypto industry, and clearly from this graph, there's still a lot of work to be done around the trust element. How do you think businesses can go about doing that?
Well, I think, especially in the crypto space, it's no surprise that trust is low. After billions of consumer funds were lost in scandals like FTX, and that's obviously a more recent one. There's more going back. But it's really about regulation. The more that we regulate that industry, the more trust will be instilled within the consumer. And to Nicole's point, on behavior, I think it shows that if you do incentivize the user, and I can give you a good example of that. I've recently started using a cashback application that is actually underpinned by open banking. And I used to spend everything on my Amex card. That's how I lived to get my Avios, so every month all spend went onto that. Now I have completely shifted my behavior because the levels of cashback are so much higher. So as I spend, I'm taking it straight from my account. I'm not putting it onto my American Express card like I was, but actually I'll do that. And I've done that because I can earn, 70, 80, 90 pounds, maybe £100 a month in cashback in doing so. So you're right, it's that incentivization that really does, move the needle.
Yeah. And I guess the other bar we've not touched on here, Michelle, is kind of the I don't need it and that lack of necessity. And sometimes, especially in kind of open banking, embedded finance, it might be that people think, well, I don't need that. I don't see the benefit. And so the incentive is about encouraging that first use.
Yeah, I think when you're especially like buy now, pay later, to me, it's something that you utilize when you have a major vacation that you potentially can't pay for, but you want to go take this vacation. So I think buy now, pay later is situational to me. Buying Nikes with buy now, pay later, it has to be something that you're not normally purchasing. When it becomes part of your everyday behavior, that could be a challenge. Like if everything you own is on buy now, pay later, and therefore your entire paycheck is gone, it's a challenge. But I think getting people to utilize it, let's say for a vacation, instead of emptying your bank account with, let's say, vacations are not cheap. Let's say it's a $5,000 vacation. You've got, family of 4. Instead of paying for the $5,000 now, if you use the buy now, pay later, and there's an incentive to utilize buy now, pay later, maybe there's a slight discount by utilizing this pay in 4, you've got a double benefit. A, you get to keep the money in your bank account or not put it onto your credit card. And then there's potentially a discount to use the buy now, pay later. So there can be ways that we could increase the use of any one of these new exciting infrastructures, but I think it does take incentives to touch it. Like if open banking, if it's the first time using open banking, like Lee said, if there's an app that's giving you cashback and it can change your behavior from credit card use to using direct from your bank, but you're still getting something out of it, that's how you're really going to change a behavior set. So there's an exciting front of how any one of these industries can grow with focus and incentives.
And that's exciting, isn't it? So another of the key things that I found particularly interesting when I was putting this together was looking at kind of UK and US regional differences. And the actual ebook has a lot more of these, and we've just put a few in here just for demonstration purposes. And here we've got, one of the most common reasons potentially for each one of these why people aren't using them, split by UK and US. So Lee, I'm going to come to you again first here. We know that trust was a problem in crypto, and we've touched on that. But necessity-wise for buy now, pay later, is that kind of something to do with this kind of skew? Do you think that's more to do with the cost of living crisis in the UK, potentially skewing that UK-US split?
I do indeed. I think, you know, we've seen some hard times here with the cost of living. Mortgage rates have exploded. Our paychecks aren't catching up with inflation. So there's so many reasons. And then obviously I won't mention the B word, but you know, that's had a real impact on the cost of goods. So I think more so in the UK, it's really seen an uplift by Now Pay Later. And actually I read it was a study by a retail bank in the early part of this year that said in the UK, it's now the second most popular finance-led payment method after credit cards.
Wow.
And that they anticipate will keep rising because of the challenge that we have with the cost of living.
It'll be so interesting to revisit this potentially in a year or so and just see how much this has changed, because I imagine that a lot more people are using it now than they were even when this data was harnessed.
Definitely.
And Nicole, from a US and challenger bank perspective, obviously in the UK we kind of call the neobanks, it's more of a challenger mentality in the US. But you know, here is US, you spoke to us earlier around the fact that kind of challenger banks are something kind of quite new, and even you yourself have only just started to use one. So is that kind of more of a awareness gap that we're seeing between the UK US market?
Absolutely. And just before I jump into that, you know, just thinking about what Lee was just talking about around buy now, pay later, it's fascinating because I think it's about 70% of buy now, pay later users actually don't qualify for a typical credit card, right? So if you also think about that, that's a huge gap of people who maybe aren't able to access rewards through a typical credit card, you know, cash back or any kind of offers. So again, there's a real opportunity for buy now, pay laters based on who their demographic is to really leverage incentives. But in terms of the gap around, you know, challenger banks, I definitely think it's growing. I mean, you know, obviously people are getting more savvy, you know, whether it's through Google, word of mouth, I mean, TikTok, at least for now in the US, at least. You know, consumers are really finding out they have more options. I mean, you think about, you know, for my parents, not having access to a physical bank was a problem, right? But now for younger demographics, no one carries cash. And so being able to have more visibility, to be able to access everything digitally is really, it works. And yeah, I mean, I personally just, you know, recently, you know, became an Airbnb host. And with that, right, I needed to set up a separate account. And I looked through a bunch of different challenger banks and found one that offered really great analytics, great tools that I couldn't get from a standard larger bank. So it's definitely evolving, and it's an exciting time as well.
And it's funny you should say that, Nicole, because here there are more and more challenger banks now that we've been speaking to, and they are serving that audience, that underbanked audience, those that can access more traditional finance. And they're really looking at how they can use rewards and cash back to really give more back to these people that really do actually need it in their sort of essential living and day-to-day living.
Yeah, there's some really interesting insights into the differences between the markets. And Michelle, as someone that's worked with fintechs across both, what do you think is the key difference? If you had to sum it up in a really succinct way, what would you say is the big difference between the UK and the US markets right now in fintech?
Oh, you're on mute.
My apologies. In the UK, because open banking kicked off in 2017, the market is just so aware of this opportunity. And I think that there's a lot more option in that optionality set. They're used to micro banking, like they might use Revolut for travel so that they have that account because they know that the FX is zero and there's no fees. But then they might have like a Lloyd's account so that, you know, they've got their core bank, they've got their micro banking, and they're getting very used to like even paying their taxes with an open banking ecosystem. So less credit card use, a little bit more of this comfort of using open banking and using multiple different services. I think in the US, also, they very much love using micro banking and like from that perspective, but open banking just isn't a concept just yet. The words are just coming out. Like in the US, they're just starting to move to potentially some steps towards open banking in 2024. So we're right in it with the CFIB talking about some changes to Dodd-Frank 1033, which will allow for data portability through financial institutions, and same with Canada. We're also looking at 2024 with some potential regulation or legislation coming to move the open bank, like the core banks, to have to share data and have some data portability in our Privacy Act. But that still hasn't passed. So both markets are just kind of on the cusp of what will be open banking. So you're just seeing the UK being farther ahead, therefore actually having a little bit more, I would say, investment dollars, like VC dollars. And you've seen a lot of purchases of UK-based companies by major organizations like Visa, MasterCard, in the open banking front, like Tinks and Visa. That was a huge purchase. And there's so many to mention. So I think the market's just a little bit more mature, and the US is definitely catching up, and once they have something, they jump right into it. So I think we're going to see a lot change over the next 5 years. But to also go back to your buy now, pay later comments, you know, the one thing I do want to say about it is I don't think people realize that when they enable buy now, pay later for the right use case, it can drive about 30% additional sales. But to do that, they also have to figure out what's that give and take that's going to get someone to touch that new payment service. And when we look at challenger banks, I don't think people totally grasp that every challenger bank is usually focused on a niche. So there's actually an immigration niche that a lot of people pick up challenger banks when they've just come to a new country. Let's say you've come from the Ukraine to North America. To get a core bank, you need a lot of documentation, but to get a challenger bank infrastructure, it's a lot easier. You do have to prepay it, but it's a gateway for immigration as well.
And that's a good point. When you look at crypto as well, there's been a couple of obviously we work with businesses globally that enable off-ramp to digital e-gift. And actually, I've had some really lovely use cases come through where someone's moved from the LATAM to the US and they couldn't access any banking, they couldn't live, and actually they lived for 3 months off of one of these platforms via digital e-gift. So their entire spend for that time was used, was utilizing that platform. And the same with people that have moved out of Ukraine, where they're, again, traditionally crypto has enabled that move and enabled them to be able to live.
Yeah, and I think that's a really nice segue into kind of the next slide, which is a little stopper in here to say, well, could gift cards be the answer? And you've just touched on, and all of us, quite a few of these use cases without even trying, because gift cards are already being used across fintech in a variety of use cases. You've got things like give and get, cashback, employee rewards, consumer incentives. And, we know that gift cards have a lot of potential in the industry, but we don't want to just assume that that's what customers are looking for. So we made sure that we asked them some very specific questions aimed at understanding, well, what is it they do want at sign up? What is it they do want to be encouraged to activate or engage with a fintech? And what do they want in order to remain loyal? And we found some, sorry, go back one slide. We found some really interesting stats across the customer journey, where over half of all respondents are actively choosing a fintech or the fintech that they want to use based on the rewards and incentives they're being offered. And when you look at specific age groups, that's up to like 70% of 35 to 44-year-olds choosing a fintech based on a loyalty reward. That's a massive number. And then when you average all of this out, it comes out as a slightly lower, but still a lovely number of 56.5% of consumers that consider rewards and incentives as influential when choosing between two fintech service providers. And Lee, I guess it's important to realize that this isn't just about major milestone rewards. We've obviously focused on acquisition, engagement, and retention, but this is also about kind of rewarding those micro moments as well.
Yeah, no, I agree. You raise an excellent point, Sophia. I see a vast opportunity to connect with the consumer using that sort of open data piece that we've touched on via the open banking. You know, if a bank was to actually say to me, Lee, I can see you love coffee, and push an e-gift so I could go and spend it at Costa or Nero or Starbucks, you know, a coffee of my choice, then that would really resonate with me. And I think that's where the opportunity lies. You know, we talk about activation. If you want someone to do something, then incentivize them, you know, spend 3 times on this card and we'll give you lunch on us. And I think it's those, you know, small micro rewards that could actually make a meaningful difference when it comes to the consumer.
Yeah, and at Tillo, we're always talking about making moments that matter. And I think that's it, is kind of taking them away from always being like, well, I gave you a gift card for signing up, so what more do you want? And instead it's that kind of like, hey, like you just said, you seem to go to Costa every Friday. Here's a $5 UK wise, it'll be Costa Starbucks, a $5 Starbucks gift card. And likely, as we've already said, they might upspend there. So actually there's an incentive there for brands to go on board, because that $5 probably turns into $10. Maybe they treat their colleague, the basket spend increases. So it is a kind of win-win for everyone. And looking at kind of these numbers, it really is quite conclusive evidence, in my opinion, that, you know, that rewards and incentives are going to be massively influential for fintechs moving forward. So I guess an open question to you, Nicole and Michelle, is kind of like, does this mean every fintech needs a rewards and incentives program in 2024 and beyond?
Michelle, you want to jump in or you want me?
I'm going to let you go first.
So, I mean, obviously, anytime you're looking at making, you know, products and services, as we're talking about micro banking, anytime you can set yourself apart, right, by, you know, whether it's through the UX or through, you know, just knowing that target audience, right, and what their specific need is, you know, tying that all together with a reward, I mean, it just helps. It's going to help any fintech differentiate, be competitive, which at the end of the day is how they're going to drive scalability and revenue and growth, right? And so it's, you know, do they have to? No, but they're going to be left behind because the others who are really putting their end users' needs first, and, you know, they're going to continue to gain, you know, acquire users and keep them activated.
Yeah, and just to layer onto that, I think the core concept, to go back to what Lee was talking about, the coffee, I used to shop on online shopping when it was brand new, and I was able to earn online shopping points essentially. And I bought a red dress from Macy's with these points, and this red dress, every time I wear it, every time I look at it, I think of Mileage Plus Mall. So there's some brand connection that you can create. Like my daughter, I have 2 kids as well. So my daughter's 15 and my son is 12. If there's any way someone can give me a Starbucks or a Sephora gift card that could then, you know, give to my daughter, the thing is the connection that is created is so powerful. So when I think of fintechs, do they need to have a loyalty system? I think back to Nicole's point, it's kind of crucial for 2 reasons. One, to stand out and build that connection, that you have this deeper root with your customer, that you can kind of, as other offers come to them, they have some brand connection to you and they want to stay utilizing your app. And 2, just looking at SVB crash in the US last year in March, it caused such a challenge to the fintechs and having them to kind of pivot from their model of just scale to figuring out how do they drive revenue. I think adding like this type of gift card infrastructure where you get 2,500 gift cards in one API on the back end, and you can get up to 800 bips where you could then have some revenue and give something back. It's a model change. It's a revenue opportunity at the same time that it's a brand connection. So I think it's quite crucial for them to start looking at how can they touch loyalty.
I couldn't have put it better myself if I tried. And the whole red dress analogy is amazing. I too have got stories where a gift card's come from a brand and I've remembered the brand that gave it to me more than the thing I bought. You know, it's definitely a brand association. And that kind of brings us nicely into our slide about incentives as icebreakers. And we obviously break this all down in a lot more detail in the white paper, but it kind of really hones in on the fact that it's so important to know your target demographic. We've all talked about our kids and your teens and yourself, Michelle, and the idea that, you know, if they can give them a Sephora or a Starbucks gift card, and it's like, well, imagine knowing that your target, you should know as a marketer, your ideal customer persona are interested in these kinds of brands. That's where they're shopping at. And then knowing that 29% of a certain demographic are more likely to try your neobank if they were offered an incentive. You now know exactly what to give them to incentivize that behavior. So we seem to be getting into a really great chat around kind of like the gift cards. So I'm going to move on there. We know the barriers to adoption. We know that people want rewards and incentives, but what should that reward be? You might have guessed it, but gift cards are the number one. They did come out on top with 67% of respondents in our research ranking them as their number one choice. And so I'll put this nice open question to the panel, and I think I'll go to you firstly around like, what is it to you that makes gift cards so appealing?
Well, it's what we were just touched on there with that sort of brand connection, but also the ability to access that instantly. So for me, that user experience is key in driving or enabling me to access that brand instantly. And it really is now I don't look at it as a digital e-gift anymore. I look at it as a payment rail. So it's a payment rail that enables me to get higher levels of cash back, or it enables or Tillo's partners to actually open up an entire new revenue stream, which is what Michelle just touched on previously. So I think, yeah, gift cards have come out on top because you can, I don't know where else I can go with that really, but they've come out on top because it's something tangible. Nobody wants cash that just disappears into their bank. And I think that's where retail banks have got it wrong for so long. Or, you know, an air mile that I'm not really ever going to see any benefit from. I think the difference in receiving something like a digital e-gift is that connection that Michelle and Nicole have just touched on. And, you know, being able to treat your child to something you wouldn't necessarily have otherwise been able to is a really nice feeling as well. So mine love Deliveroo, and Deliveroo really racks up a bill. So it's nice that, you know, it's nice that I can get that and give them more healthy takeaways.
And yeah, Nicole.
So I was just going to jump in if that's okay, but you know, really, if you think about it, it's the choice aspect of it, right? I mean, you know, giving someone the choice, whether it's Deliveroo or Macy's, right? Wherever people are shopping, it allows them to have that, it's top of mind. So obviously it's a benefit for the brand as well. But then, you know, our needs evolve. So, you know, historically, you know, if I was only given a reward on one product, you know, when I was younger, it would have all, you know, been gift cards to buy clothes and things like that. Whereas now, you know, unfortunately, it's not as exciting, but any kind of grocery gift card or Amazon gift card, which ultimately is same as cash, but it's, you know, it's money that, you know, it's replacing, and I know it's going to be spent towards those things. And, you know, having that flexibility is key.
Yeah. And I think just to layer onto that, back to the point of when you get a gift card in these times when things are very challenging, it can be used for groceries. It can also be used to be regifted. Like everyone has birthdays they have to go to. If they're going to get a virtual card, they can actually share it forward. And that can help them gift this forward or give it to their kids. Like I was mentioning and Lee was mentioning, you know, my son's into gaming. If V-Bucks, like if you don't own V-Bucks, that's phenomenal. But if you have a 12-year-old son, it's a very challenging world, and I don't want him to have a lot of it. But if it's gifted to me, then there's some type of, oh, this is free money. Or, you know, there's so many ways that a gift card can be reutilized and has that emotional value.
Yeah, and that was the slide I sneakily previewed, which was the elephant in the room, which is like, well, what about cash? Because everyone goes, well, I would rather have cash. And actually, we wanted to make sure we weren't trying to avoid this question. And surprisingly, few people said they did want cash. And it's exactly for these reasons we've just talked about. The fact that, you know, you get given a cash reward, it disappears into your bank account. Before you know it, it's been used on your mortgage or your bills or just putting some fuel in your car on the way home. As a gift card, it's like, okay, that's fun. And it's all down to this kind of concept, I don't know if anyone's aware of it, called mental accounting, which is basically the way you file different methods of payment. You get cash and it's folded away with your bills and your mortgage and kind of more boring and everyday purchases. You get given a gift card, and not just for the word gift card, but it's then pleasurable, it's a reward, it's a present, it's a gift. So not only are you getting that emotional response of like free money, but you then also get to spend it on something that maybe you wouldn't have normally chosen to allocate funds to. And so the overall experience of that gift card is just much nicer for everyone involved. I personally love getting gift cards, and you're exactly right. It feels like free money, and the girl math is strong with gift cards.
It evokes an entirely different emotion. And look, you know, that is probably Michelle's story there with the red dress is probably one of the most favorite, my favorites now going forward.
Same. And like we looked at this data again in more detail by age, and it was strong across all demographics that people love gift cards. In fact, almost 80% of the 35 to 44-year-old demographic said they saw them as an attractive reward or incentive. So there's a whole lot of love for gift cards out there, and they shouldn't be ignored. But taking a quick step back, because obviously, you know, there are other types of rewards incentives out there. We wanted to look at what it was specifically about rewards and incentives, whatever they may be, that people want. And we kind of touched on this inadvertently anyway. You know, the monetary value came out on top, ease of use was second, variety was third, which was our choice element, speed of redemption, to your point, Lee, you don't want to be waiting months for this reward to come in, you just want it now, exactly in the moment. Availability on mobile, we're in a digital first age, and that personalization element too. So, you know, back to you, Lee, we all kind of want value from a reward, but ultimately it's consumer experience, isn't it?
It really is. It's end user experience is everything now, because we're in such competitive times. And this is what will really drive a consumer to choose one application over another. Technology makes it so easy to switch, because literally we can download an app within a few seconds and then it's there. So it really means that the engagement piece is key, and its rewards obviously will unlock that engagement. And cashback apps, we can take them for example. You know, we just spoke about this, the access of being able to do something at point of sale in real time. So I can order, you know, I can be at the till and actually put in the exact amount that I need, and it's there in a few seconds to be used, and then I see that instant cash back. And that really is seamless UX that delivers, you know, a real good feeling as I leave that shop, because I've just got something that the person behind me hasn't got £9 back into my bank.
And Nicole, something that's come up a lot in conversations recently at Tillo is obviously the idea of card linked offers as well, that they're still a big thing. And kind of the idea that what is the benefit specifically of using something like a gift card over a card linked offer? Because they kind of do the same thing, but they're also extremely different things.
Yeah, I mean, it's obviously the affiliate marketing space in general, right? It's continuing to grow. And, you know, I think, and I know Lee, you mentioned it, I think it's a shift from thinking of gift cards as a true gifting vehicle to that branded currency and kind of what that offers. And, you know, when you think about gift cards, the biggest benefits that come to mind are, you know, they're top brands, right? So the brands that people really want. They're constant offerings. So it's not a, you know, during this month only you can get this brand. And so there's no expiration on the offers, but also it's an everyday high margin, right? Or discount. And so, you know, it's one of those where it's also up to our fintech partners to decide how they want to, you know, potentially share that piece. So, you know, there's so many benefits there where you can incentivize, again, driving more cash back with that margin, or, you know, just by featuring those brands alone, because again, a lot of them don't necessarily participate in card linked offers. You know, the fintechs are really able to boost their own brand by showing, hey, these trusted brands work with us. We feature them every day. That really grows that trust of, you know, the fintech leveraging cashback, you know, for these kind of offers.
And it's so different, isn't it, Nicole, to that sort of card linking space where you're in the app and you're seeing you got that small amount of cash back, but actually you're going to wait 60 or 90 days for it to land.
Absolutely.
And that really, you know, that is obviously, you know, again, it sets this apart because it's instant.
And the fact that you'll get your first offer will be 15%, and you'll think this is amazing, and then it's 1% after that,
Yeah.
or it's just gone, because actually they're only interested in that first tap. As with gift cards, the always on element, the fact that they're consistent is so much more appealing.
Definitely.
Michelle, anything you wanted to add from a sort of like, what is it that consumers want perspective?
Yeah, I think back to Nicole's point, when a fintech works with all of these brands and is able to say that they're working with Nike and Apple and Starbucks and Google and, you know, Roadblocks and whatever that might be, it looks like the fintech has gone and spent months, years building this rapport with these brands that means so much to the consumer. It gives them an echelon of like added trust, that they have these partnerships, and because they're everyday discount opportunities, it's very consistent. So it kind of creates this rapport alongside it. And then I think the other thing we haven't delved into is, even from an employee perspective, if there's a reward that you're getting as an employee that is coming from Apple or Google, and you're able to buy those Nikes that you weren't going to purchase because you're going to get the $50 ones, but now you're going to get the $150 ones. Every time you put them on, you're going to think, oh, my company gave me that extra benefit that then gave me those Nikes. And there's something in it for everyone, because the company gets that Nike access at a discount, and then they're also able to push that discount onto their employee or their customer, or they could turn it into a little bit of a revenue stream. So it's kind of a win-win-win offering through card infrastructure.
Yeah, and that variety, as we've talked about, kind of the importance of choice. It comes up again and again and again, because ultimately when you're talking about gift cards, we're not talking about just one gift card.
No.
We're talking about what something like an API can do, is connect you to thousands in one go. And I think, and I don't want to make any bold claims, but I think we are the first, or one of the first, to have asked our consumers in this survey how much choice they actually want. If they were offered rewards and incentives in the form of gift cards, how many gift card brands do they want to be able to choose from? Because I don't know about you, but I kind of assumed it would be, well, infinite. And actually the numbers surprised me until I started to think a little bit more deeply around, well, maybe why is that? So less than 5% want a single brand specific reward. Like, obviously it still has a place. I think if you really know someone down to a T, give them a specific gift card. But when you're talking about mass markets, mass demographics, it's very difficult to say, well, surely every 18 to 24-year-old loves Starbucks, right? When actually maybe they don't. So we asked about choice. And Lee, we all want that choice, but the numbers are varying. Why do you think that there's kind of a decline? I guess it's almost linear. It kind of annoys me that the 55-64 is just down a little.
Yeah, exactly. Well, I think we do all want choice, and nobody wants a reward that they can't use, or you know, that doesn't resonate with them. I think as we age, we really are clearer in what we want, and I think you can see that there. So the younger generations, you know, aren't so sure, so they want more choice, whereas as we age, we definitely know what we want. I mean, I'm definitely not in that middle bucket. I'm sort of more towards the left of that screen, but yeah, no surprise. I think when a fintech gets it right, it's relevant brands that speak to that audience. And I think that's where we have obviously ChoiceLink, where you can put a bespoke catalog together that can really talk to, you know, each one of your demographics or whoever it might be that you're targeting.
Yeah. And like with the ChoiceLink example as well, the main thing there is you can also split the redemption. So you know, you don't have to say, well, I've got $20 and I can only pick one. You can have 5 here, 5 there, and 5 at another brand, and then just leave another 5 on there for a rainy day and be like, oh, another Starbucks gift card. That ability to split the reward value, rather than saying here's 20 for one, you're basically giving them the choice to have 4 mini treats
and
over
it's really,
one treat.
Yeah, it's really lovely to receive that, because
Yeah.
I've had them myself, obviously from Tillo, and it's just really nice because I can go in and put, you know, £50 on that brand, £20 on that brand, and £30 on something for me, maybe, if my kids have left me with that.
I think, Nicole, we spoke a little bit around the fact that with choice, there's sometimes a fear of cannibalization, especially if you're a brand or a retailer that has your own gift card. Well, why should I give people access to spend elsewhere? What are your thoughts on kind of that? Is it something that people really need to be worrying about?
Great question, honestly. And thankfully, my background actually, I have a lot of experience with it. So obviously, if you're thinking about a retailer, especially, you know, who has, they don't want competing brands in, you know, their offering. But if you think about it, again, with that affinity to certain brands, if I know that I'm going to buy an Amazon gift card, you know, if you don't have it, right, there's people who you're going to miss out on by not offering it. So better make a small, you know, how I always talked about it with, you know, my partners is better to make a little bit of something than nothing, right? Because if you're not offering that choice, if you're not offering it, and at the end of the day, the great news is it's also really, you know, it's all incremental. And then it's incremental for the brands as well, right? Because they're also getting placed, you know, in a space that's maybe new, getting access to new users that hopefully, like you guys mentioned, will upspend. So it really is symbiotic in that way that the tide rises for everyone.
Yeah. And Michelle, from a kind of choice element for fintechs that you've worked closely with or have experienced yourself, kind of what is it about their programs? How much choice are we seeing already? Is choice something that's already being offered, or is it something that's actually going to be a great differentiator in the market for people looking to kind of stand out?
Yeah, I think a lot of fintechs have gone down the route of trying to create these one-on-one relationship partnerships. Therefore, they only have 5 of them or 10 of them. And I think it's good because they're building some brand relationship alongside those partners, but it's also really heavy it's a heavy lift to have a partner, the contract, trying to figure out where they can use the brand, how they can use the brand, when they can use the brand can get really complex. So I think, you know, looking at Revolut and the fact that they kind of already work with Tillo and have this back end access to thousands of different gift cards with this one API, it's just so simple. I think not enough fintechs realize how easy it is to just kind of enable this and have that look and breadth that could really please their customer base.
Yeah, I'm so glad you said that, because like, I think that's it. It's a fear. You see these numbers, and actually I'm going to go to the next slide now anyway. 34 for those that want a nice round number and not to look at the data. You look at that and you think, God, I've got to make 34 connections to 34 brands and go through 34 approval process with 34 different terms and conditions. And that's it. It's actually, there is an alternative, and it is something like a gift card API where you sign one contract, you do one integration, and then it's as easy as that, really. And there is, you know, there's a lot to take away here. And I don't want to waste too much time. I think we are kind of coming up to time. I want to make sure we've got time for questions. But ultimately, choice is important, personalization is important, and it is something that people are looking for. So to summarize quickly before we get to the Q&As, there's still work to be done in fintech to increase adoption, engagement, and retention, but that should be seen as an opportunity and not just a challenge that can't be overcome. Consumers are telling us that they value rewards and incentives, and they want to be seeing them offered by the fintechs they use. In fact, it's more than that. They are choosing fintechs based on the rewards and incentives they're being offered. So if you want to compete in this market, you're going to have to get on board with rewards and incentives, or even go that step further and find a way to stand out from the competition while using them. And lastly, if you're thinking, well, what do I offer people? Gift cards have emerged as a clear winner, with choice being a very important factor to consider too. And so altogether, this is a pretty clear, very oversimplified blueprint for a loyalty program with far more insights in the full ebook. So there's a QR code on screen for anyone that hasn't got a copy. We'll also be sending one out after the webinar. And we're going to quickly move on to a nice Q&A session. So we'll wait a couple of seconds, see if any questions come in. I think we have got a few, which is nice.
Excellent.
Okay, I'll start off with this one. I think for Nicole, if we want to offer some of the discount to customers, do the brands care what percentage we share with them, with the end user, sorry?
Yeah, great question. So ultimately, no, our partners get to determine that. So obviously we've gone and we've negotiated, you know, rates directly with the brands. And so, you know, when we pass those to our partners, they get to decide. So obviously, you know, we have some partners who have subscription models so that, you know, if you pay for a certain membership, you could unlock more cash back, or, you know, so there's a lot of different things, but, you know, and then there's some where they don't have to share any of the discounts. So it's really up to their discretion, you know, whether it's for campaigns or any kind of whatever that specific use case is.
Thank you, Nicole. Okay, another one. If everyone is offering gift cards as rewards and incentives, as you suggest, then how does someone stand out? I think this is a nice one for you, Lee.
Okay, great question. So I think I think it'd be the more forward thinking that stand out here. We've talked a lot about the evolution of fintech and how fast that's moving and how it doesn't stand still. But if we take digital e-gift and look at that, it's actually really evolving. And I think we're just scratching the surface, because historically we started in that employee benefit and reward and recognition space. And then, as we talked about, that affiliate space where it was predominantly used for cash out. It's no longer, we've touched on this, but it's no longer a gift card that your work gives you for doing well, or that your grandparents give you for a gift. It's actually a payment route, and it's those fintechs that really utilize that, the connections that we have and the margins that we've agreed. They'll be the ones that will come out on top.
Thank you. Nathan, I'm having trouble refreshing my Q&A screen. Are you able to see if there's any others that have come through? Nathan's been sitting on the call as a ghost down the bottom there. He's been organising the webinar behind the scenes.
Hi, everyone.
Well,
Hi.
hey, Nathan.
Big reveal.
I have not seen any come through, to me at least.
Perfect.
I can layer on to Lee's comment. I think when you think of, if everyone's offering gift cards, how do you stand out? I think you take a look at the gift cards that you have within your portfolio and see how you highlight one per month, because you have access to them, because you're in charge of what give back you give and when you give. You can pick a brand, you can highlight it, you can give an extra discount where you maybe make less that month, and utilize it in a specific way. Like Lee had said before, if you spend $50 every month for 3 months, then we'll give you X, and then you have a specific brand that you're kind of highlighting, and then you switch the brand so it looks like you have a whole new offer. So you could just get really creative, I think, with the back end infrastructure, and think with your marketing team, how can you utilize these incredible brands to highlight initiatives within the organization?
You're right, Michelle. Actually, the creativity point is key. If you look at some of the ways that the fintechs are actually utilizing that margin, they're doing it in different ways, but they're all using the same margins. But it's just, how do you wrap that up and deliver it to your target market and it be relevant? So the instance of, paying off, taking the cash back and paying that towards the interest on your mortgage, that is a brilliant use case. It's one of my favorites. And if you think about compounded interest and what your cashback might look like in 15 years' time, if you've earned £70 that month, what would that look like in 15 years? And it's a really clever use case that's really relevant for that target audience. So yeah, my message to fintechs would be, have an engagement strategy, be prepared to pivot, and keep moving with the times. And execute.
Yes.
Very importantly, execute.
And that's the beautiful thing, if you think of it, we have partners that, integrate to our API, and they're able to access, all of our global content. And maybe they join originally because they are looking for rewards. But to both of your points, I mean, as the customer needs and the, use cases evolve, they've already got the API to, to just, rotate quickly, or what's, basically pivot. That's what I was looking for, not rotate, but pivot quickly, because they've already got it. So then it's just building that UX, and, the opportunities are really just kind of endless from that perspective.
Yeah, I think we've definitely focused here on the kind of acquisition, engagement, loyalty, which are kind of 3 of the more traditional use cases for digital gift cards as rewards and incentives. But ultimately, as you've all said, it's thing that's going to make people stand out is then taking that concept and switching from rewards to incentives. Think of it as a feature of your platform. And the kind of the businesses that we're seeing that are doing really well have kind of not only having them embedded into their reward strategy, but it's also now a added feature or a benefit of their offering. And like you say, Nicole, having an API means that there's no new integration to do. It's already there. You just turn it on for a new use case, and voila, you've got a better app or product.
More
Yeah, so I think we're coming up to the end, and we're coming up to time, so we have no more questions. I think we're going to end the webinar there. And as always, if anyone has any more questions for us, you can reach out to us directly. It's been great. Thank you everyone so much for joining me.
Thank you so much for writing the ebook. It's amazing.
It was a long project.
Brilliant. Well done.
You should
Thanks,
be really
everyone.
proud. It's
Yeah.
very insightful. So thank you, and thank you all. It's wonderful.
And thank you, Michelle, for
Yeah.
joining. You've got a really exciting kind of masterclass coming out soon. If you wanted to give everyone a little insight into that.
Yes, just about to announce that we're dropping a masterclass on the future of finance. We're including the ebook in our loyalty prepaid expert session, but there's 10 plus hours of content to try and grasp the future of finance. So hopefully some of you can come join. We're just about to launch next week.
Amazing.
And on that note, thank you, everyone.